Good afternoon to all of you joining us online today, and welcome to Export Development Canada's webinar on the subject of the Greater Asian markets. As you know, today is a rare event. It's a leap year, and EDC's version of celebrating the arrival of February 29th also includes a rarity, having all three of our Asian chief representatives in one room at the same time. And the timing couldn't be better. Canada's exports to Asia have more than doubled over the past decade, and the pace of that growth is showing signs of increasing still. And we've seen that here at EDC as well. Companies like yours have increased their use of EDC products and services in Asia an astounding 60% in 2011 alone. You know, there's a lot of facts and figures and folklore about the trade with the Greater Asian markets, but the only way to separate fact from fiction is to be in those markets yourself, or you benefit from those that have significant experience there. And today, we're offering you the latter, to hear what EDC's key people on the ground in Asia have to say about the latest trends and developments in their markets that may be relevant to your business strategies. So with me today are Jacques Lacasse, our Chief Representative from China based in Shanghai, and Vijendra, who we call Vijay Gerola, Chief Representative for India based in Mumbai, and of course, Rob Simmons, our Chief Representative Southeast Asia based in Singapore. Gentlemen, EDC's literal men on the ground, welcome and thank you for being here with us today.
Thank you.
Now, for those of you at home, our webinar today will be heavily weighted towards an open question and answer session because we believe that you, our audience, can derive the greatest benefit by having your questions, those directly related to your business, answered by our market experts. So, to ask your question, simply click on the Q&A button on the webinar interface screen. It should be right below our screen, and we will get to your questions in short order. And so, to kick off today's talk is Jacques Lacasse, of course, EDC's man in Shanghai. Jacques, over to you.
Thanks, Phil, and thanks to all for joining this Asia webcast today. Just a few years ago, it was relatively uncommon to read a press article concerning China. Now, China makes the news almost on a daily basis. It became a fantastic economic power and is gaining as well more and more political influence on the international scene. Let me share with you some basic economic facts to demonstrate the importance of China and why Canadian companies should develop a strategy to respond to these new challenges and opportunities coming from this part of the world. First, China has become the second largest economy, taking over from Japan a few years ago. Second, this is the most important foreign direct investment destination with $126 billion invested last year by foreigners, including $5 billion coming from Canada. Third, China had the highest sustained economic growth rate for the last 30 years. Fourth, a few years ago, China became the most important automobile market with over 18 billion vehicles sold. Even GM now derive more sales and profit from their Chinese operation than from the US. Fifth, on the construction side, not to mention the unbelievable amount of infrastructure projects going on everywhere in China. 2 out of 3 buildings over 200 meters under construction in the world are in China. 6, for Canada, China is now the second trading partner and the third export market with around 15 billion a year. China is a top priority for the Canadian government, as demonstrated by the recent visit of Prime Minister Harper. This visit was very successful, and our Prime Minister was able to finalize the negotiation of the Foreign Investment Protection Agreement that has been in discussion for 18 years. It was also a great opportunity for him to meet the upcoming generation of Chinese leaders who will take position at the end of the year. Our respective economies are considered complementary, as Canada is a very important exporter of natural resources, while we import a lot of consumer goods. This is the backbone of our trade relationship, and this will certainly continue to expand with projects to build new pipelines to the West Coast and as investment from Chinese companies continue to flow in this sector of the Canadian economy. Not surprisingly, a large amount of EDC support in Greater China is in the resource sector. Hundreds of Canadian companies are using our account receivable insurance services to grow their sales in this market. Our experience is quite positive, with limited claims reported. We believe that China also offers good opportunities for machinery and equipment with advanced technologies, as well for agricultural goods. Direct investment is also an excellent strategy for Canadian companies that want to enter or expand in China. According to our knowledge of the market, there are more than 300 companies already invested in China. A survey performed in 2010 by the Asia Pacific Foundation indicate that a large majority of these companies are well satisfied with their investments and the level of profitability generated by their Chinese operation. Initially seen as a low-cost manufacturing hub for exporting to developed markets, China has become clearly a market by itself where companies can tap local business opportunities as well as position themselves to integrate the supply chain of the numerous international companies operating on the ground. EDC has a nice suite of financial solutions to support Canadian direct investment in China. We can offer credit insurance to the local subsidiary. We can provide guarantees to the exporter's bank in order to help financing working capital requirements or capital expenditures. Our political risk insurance could also be of interest to protect your investment. And finally, we have close relationship with local financial institutions as well as some large corporations that could help your company expand in the market. Of course, we work closely with partners like DFA, CanCham, CCBC, and private providers of various services. While opportunities exist in many sectors, I think we should give a close consideration to the recent 5-year plan launched by the government. As China is a planned economy, this document gives us clearer indication of the growth sectors for the years to come. For Canada, we think the opportunities reside in environmental industry, clean tech sector, the high-tech manufacturing, where our technologies could improve productivity, and the service industry, where our know-how could also contribute to increased productivity of the Chinese businesses. There are many challenges a company has to face when investing abroad. As far as China is concerned, here are a few that investors should be aware. It is a very competitive environment. Human resources are the recruitment, the training, the cost. This is an issue for all Canadian companies operating in the market. Protection of the intellectual property rights and the financing of the local operation. All these are quite important challenges. In conclusion, great opportunities and potential. I think this is quite accessible to companies of all sizes and full availability of EDC services and a local presence that would be pleased to meet with you on your next visit in Shanghai or Beijing. See you there.
Thanks, Rob. So just to clarify, did you say 18 million cars a year?
Yep.
Wow, okay, well obviously a very booming middle class there. No stranger to that booming middle class phenomenon would be our next guest, which would be Vijay, to shed some light on what's happening in India. Vijay.
Thank you, Phil, and good afternoon to everybody. Now, as most of you already know, India is now a country on an unprecedented growth trajectory. Business opportunities are abound in India. As a chief economist of one of the major Indian group told me last year, it took India about 62 years to reach its first $1 trillion of GDP. It'll take India only next 7 years to get to the next $1 trillion at the current growth rate. A very convincing argument, I would say, that effectively sums up as to why Canadians should focus on the Indian market. India has solid mid to long-term economic fundamentals in place. It has been experiences fantastic economic growth of over 7 to 8 years for the last number of years, and that trend is likely to continue. What is exciting is that the demographic factors in India are very favorable, with half of the population at around 30 years of age. Now, if this workforce utilized properly and as they come into the workforce in the years to come, this would do wonders for the economy and it would continue to fuel growth in India going forward. So, bottom line is, where are the opportunities for Canadian businesses in India? Well, I would say pretty much everywhere. But some of the key sectors where we believe there are good opportunities for Canadian companies in India and where EDC is focusing are one, infrastructure. Everybody knows about infrastructure deficit in India. Well, over $1 trillion of planned spend infrastructure spend is going to happen in India in next 10 years, and that would provide tremendous opportunities for Canadians in India. This infrastructure spend would be in sectors like ports, airports, roads, rails, pretty much every year. Even if it's not $1 trillion and it drops down to under $1 trillion, half of that, even $500 billion, is a huge number. Clearly one of the largest infrastructure markets in the world, pretty much close to China. Another sector that's of tremendous interest to Canadians is automotive. The Indian auto sector has grown by more than 40% in last 12 months itself, and there's a large demand for automobiles and auto parts in the country. Auto component manufacturers are running at full capacity right now, and OEMs in India are facing delays and shortages of auto parts, prompting the industry to ramp up capacity by importing or partnering with foreign companies. Now combined with low penetration rate in India, I mean the low vehicle penetration rate, which is about 0.01% versus over 50% in developed country, the potential becomes enormous for any Canadian auto component manufacturer looking to enter into this sector. Another area of opportunity that could be of tremendous interest is ICT, information and communication technologies. Telecom sector continues to be one of the fastest growing telecom markets in the world, with a net addition of about 10 million subscribers every month. The overall tele density is about 50%, so there's still a lot of room to grow in the market for equipment manufacturers, software, and other telecom service providers. And another sector that could be of interest to Canadian companies is clean tech, renewable power, solar, wind. Clearly a lot of emphasis in India to develop these sectors. Solar in particular, India plans to have 20 gigawatt of solar generation capacity by 2020, up from almost zero at present. Now, as far as EDC in India is concerned, there are 5 representatives on the ground in India, in Delhi and Mumbai, and that's one of the largest EDC presence outside Canada for EDC. Clearly shows the emphasis that EDC, along with Government of Canada, has placed on India. In 2011, we facilitated about $2.5 billion of business in India. That's about 40% growth from the year ago, and about $500 million was just in providing financing to facilitate trade. So what can we do for you? Along with our financial tools that we have, whether insurance or financing products, one of the major unique selling points that we have is that we have developed deep relationships with all major business groups on the ground. And I'm talking about the business groups such as Tata's, Reliance's, L&T's, Aditya Birla, Srei, and so on and so forth. And we'll be very, very happy to connect you with with our relationships on the ground that may be of interest to you. So we request you all to get in touch with us and let us know what your plans are to do business in India. And EDC will be glad to help you in connecting with its relationships and, of course, provide you with our appropriate financing solutions. Thank you.
Thanks, Vijay. $1 trillion in 7 years.
That's right.
Yeah, that's a market we need to be in. So finally, what we're going to turn to is Rob Simmons, our Chief Representative based in Singapore. And we know that you have some sizzling markets as well. So let's hear about those, Rob.
Thanks, Phil. I'm very pleased to be here today with my colleagues from Shanghai and Mumbai. As EDC's Chief Representative responsible for Southeast Asia, I should probably more correctly be sitting in between India and China, because I've often said that Southeast Asia is straight down the middle of Asia. Let me explain, first of all, what region of the world I'm referring to when we talk about Southeast Asia, because the definition of Southeast Asia changes and varies greatly. From the EDC perspective, we refer to Southeast Asia as basically the ASEAN economies, the Association of Southeast Asian Nations, primarily Philippines, Malaysia, Thailand, Vietnam, Indonesia, and Singapore. I'd like to say that from the perspective of a Canadian investor or exporter, the strength of Southeast Asia is actually in its diversity. Each market is different culturally and economically, ranging from the only AAA market, Singapore, in Asia, and to truly frontier markets like Laos and Cambodia. This diversity is compelling because a Canadian company looking to gain a foothold in Southeast Asia or in Asia can choose a variety of entry points through Singapore, for example, which is consistently ranked as one of the easiest places in the world to establish a business, or to large consumer markets like Vietnam or Indonesia, or a compelling mid-sized market like Malaysia. So there are a variety of entry points that companies can choose depending on their business strategy. If India and China are Asia's cream donuts, then I like to say that the Southeast Asian economies are like the Timbits, many flavors and hard to resist. EDC's global economic forecast from last fall talked about not getting bricked in. In brief, my colleagues in EDC Economics did a ranking of non-traditional, i.e. non-brick, emerging markets according to the potential for Canadian trade footprint to grow. 14 countries made the top of that list, and I'm pleased to say that 4 of those markets are in Southeast Asia: Indonesia, Thailand, Philippines, and Vietnam. Well, I could talk about each of these markets, and we do solicit your questions, so maybe there'll be some questions later on. Let me focus for a minute on Indonesia, the largest market in the region. Indonesia is very interesting at the moment for a variety of excellent reasons. It is now investment grade. It is a member of the G20 with a $1 trillion economy, 240 million people, endowed with resources, and it has a reform-minded democratic government. Someone recently said that Indonesia only has 3 problems: infrastructure, infrastructure, and infrastructure. The spend on infrastructure as a percentage of GDP in Indonesia is much less than other countries in the region. This infrastructure spending gap is preventing Indonesia from achieving its full growth potential and attracting FDI. It's simply difficult moving product around the country. So like they say in Asia, in a challenge there's an opportunity. Indonesia will need at least $250 billion in infrastructure investment over the next 5 years, which according to my math is maybe about half of India's infrastructure spend, but still quite significant. Indonesia has to invest heavily in airports, and right now there are 187 airports in Indonesia, in rail, ports, roads, power, and in water. There's a desperate need for investment. The government is counting on attracting private sector investment in the form of PPPs, and has established a number of agencies to mobilize investment and the necessary debt financing for infrastructure. The government has also just recently addressed one of the main impediments to infrastructure development, particularly for transportation. That is the passing of a land acquisition bill that will make it easier for investors and developers to acquire the land to build the infrastructure. Beyond infrastructure, obviously one of the most compelling things about Indonesia is its young, consumer-orientated population. As the economy continues to grow, the opportunities for Canada will grow exponentially. Just consider, for example, the fact that 80% of the inputs into food products that are consumed in Indonesia are imported. Quite a compelling opportunity. Keep in mind, however, that Indonesia knows this. They know that they're a compelling market for international investors. And so there's a requirement for local offsets, onshore investment, and so be prepared. Expect the unexpected. It's never straightforward in Southeast Asia or Indonesia, but there are lots of opportunities. I didn't mention earlier that Southeast Asian nations, in terms of a total GDP, is about half of India as well. The Southeast Asian economies are trading nations, and it is home to some of Asia's most ambitious entrepreneurs. It's open for business. And policymakers in Southeast Asia realized some time ago that Southeast Asia is stronger together than apart. And serious reforms have been underway in recent years to increase regional economic activity. In parallel to this, a number of corporations are emerging as strong regional players. In telecom, for example, there's Singapore Telecom, there's Axiata out of Malaysia. In airlines, there's AirAsia and Lion Air. In infrastructure, there's companies like First Pacific and San Miguel. Financial services, very strong banks like DBS out of Singapore and ANZ. Food processing and distribution, Wilmar and CP Group. And in energy, Petronas, PTT. There are many examples of corporate groups that are emerging from the Southeast Asia economies. In EDC, those of us in International Business Development Group are focused upon facilitating Canadian trade and investment. But we're also looking at doing our part in creating Canadian trade. Part of this involves building strong relationships with buyers of Canadian goods and services and seeking opportunities to introduce them to Canadian partners and suppliers. In Southeast Asia, we're building close relationships with many of the leading corporate players that I just mentioned a minute ago. And so we're very interested, as my colleagues are, in finding out about your interests in Asia and helping you to do more business in Asia. Thanks.
Well, thanks a lot, Rob. That was great. So infrastructure is strong in Indonesia, right?
Infrastructure is weak, but the investment and the opportunity is there.
You only said, I just wanted to make sure. Okay. So at this point, we're going to begin to take your questions. So let me remind you that to ask a question, just simply click on the Q&A button on the webinar interface of your screen. One thing I do want to mention, as they start to roll in these questions, what we want to do is if you are specifically asking about a sector, please let us know what line of business that you are in so that we can sort of narrowcast those answers towards your business. So we've got a few here. We're going to start. Vijay, how do Canadian companies deal with the extremely price-conscious Indian market where many customers are willing to trade quality for price?
That's a very interesting question. It is a very value-conscious market, I would say. You need to show value to Indians and they would pay the price. It's not that Indians are not willing to pay the price. They would. But the perceived value that they want out of the dollars that they're paying to you should be more than the actual dollars that they're paying to you. And therefore, my advice is to go in there and show the value to Indian companies, and they would be more than happy to do business with you. They do not necessarily go for the cheapest price. Mm-hmm. That was true 5 years ago. I don't believe that's true at this stage.
Okay. So really, it's almost a relationship question as opposed to a price question.
That's right.
Okay. All right. Let's see here. Okay. This is both to Vijay and Jacques, and I think maybe we'll start with Jacques. What are the opportunities in the nautical industry in India and China? Mm-hmm. Jacques?
Well, certainly in China, this is the largest vessels manufacturer. So, and of course, most of these large personal boats are not yet manufactured in China, but many manufacturers from Europe are thinking about establishing in China as well. Mm-hmm. But certainly in this whole industry, I think you have many port facilities and shipyards and manufacturers. So, generally speaking, a very good industry. Yeah.
So is it almost a JV, perhaps, perception, given that they are established in China now?
Oh, they are established and have big players, so it's more maybe entering the supply chain of these large corporations. Chinese corporations, these are essentially Chinese companies.
Yeah. Yeah. How about you, Vijay? Same story on India's side?
It's slightly different. India is not a very big shipbuilding industry. I'm not sure what particular segment of nautical industry our exporter has been talking about, mm-hmm. but I'm assuming it's shipbuilding, but in general, shipbuilding industry is not very big in India. Mm-hmm. There is a lot of expertise around India, and therefore it sourced from those countries, whether it's Korea, China, or Japan. Mm-hmm. Those are the centers. India does have some shipbuilding facilities, some shipyards, but by and large, it's an import into the country.
Mm-hmm. My understanding, though, in India, particularly in shipbuilding, is they are the world's largest scrapyard for large ships, if I'm not mistaken. Many countries around the world will take their scrap too.
Indeed. In that respect, it's quite big, and therefore, perhaps if the exporter could follow up with us as to which particular segment of nautical industry we are talking about, we'll be able to pinpoint.
Okay. Well, we'll definitely ask our audience, and if you do want to know a little bit more, ping us again, and we'll certainly go through it. Rob, I'm going to throw one over to you.
Sure.
A lot of questions about a number of your markets, but we'll touch on one right now, a few of them. Vietnam, particularly as they are soaking up labor from China, and they are being seen as a strong growth equation. What do you have to say about Vietnam?
Sure, I'm glad you asked. Vietnam is the other market other than Indonesia that there's often a lot of interest in. And exports comprise 70% of the Vietnamese economy. So it's definitely, I think that's probably one of the highest in the world in terms of the GDP comprising exports. And so it's definitely an exporting country. It's consistently been very attractive for foreign direct investment. And so it's part of the global supply chain. In some ways it's maybe a sub-supply to China or an alternative to China, but it's definitely part of the global supply chain. So for us, what our focus is in Vietnam is looking to support Canadian companies that are entering into direct investment abroad. We call it CDIA. And we're developing relationships with banks in Vietnam, and working with a number of companies to try to make sure that they can invest successfully in the Vietnam market. It's not an easy market. The economy tends to fluctuate between growth momentum and inflation, and the government policies shift back and forth. So it's kind of a go and stop type of economy. But it certainly is very active in terms of exports. The domestic market, the consumer side of Vietnam, is a bit more challenging, again, because of the shift in public policy from growth to fighting inflation. And that's an area where there's opportunities, obviously, for Canadian exporters in food products, for instance, but there are challenges. The final thing I'll say about Vietnam, which is really the most compelling aspect from a Canadian perspective, is the desperate need for technical training and more advanced training in the market. As manufacturers invest, they need skilled labor. And Canada is very well positioned to deliver training solutions to a market like Vietnam.
And we've heard both Jacques and Vijay talk about the competition within those markets. Is Vietnam experiencing quite a amount of competition right now in terms of companies trying to access that market and the advantages that it offers?
There's certainly competition. I mean, and currently, as part of the global flow of economies, I mean, Vietnam has had a tough time in the last few months. That the global consumer market and the supply chain is kind of slowed down. But certainly there's a lot of competition in investing in Vietnam, and there's opportunities for Canadian companies to go in and look at being part of the sub-supply, the supply chain, to supply the multinationals that are opening up in Vietnam, and establish an operation that looks beyond Vietnam to the Asian region.
Okay, thanks, Rob. So a few questions here. We'll try to get through these. Jacques, this one is for you in China. We are in the technology sector, I'm sorry, and would like to know what the best strategy for protecting IP, and if it fails, what recourse do we have? This is a question we get a lot.
Yeah.
So,
and a very difficult one,
Yeah.
Phil. I can appreciate that. And I visited and discussed this, visited many Canadian companies operating in China and foreign companies, generally speaking, and had this conversation with experts of all sorts, and even a gentleman who was the director of the IP protection for Vuitton, the French
yes.
company. And it's, what I can say, it's getting better. But it's always an issue, and there is no easy solution in the sense that this is what you should do. And this is a fantastic economy, and foreign investment is welcome, but you do have to take some measures to protect your IP, and that's fair enough. But there is no one single solution to this. But certainly what you do, and I've seen cases that companies are going in the market and not even protecting their trademark. I think there is a system in place where you can register your trademark, you can register your name, and this should be done. So all type of protection you do in developed market, you should do the same in China. Mm-hmm. But there are other of course measures that you should take to make sure that your IP is protected. There's no easy solution there. But again, back to the reality of the game, people are there with high-tech equipment and technology and manufacturing plant, and they are operating without too much concern on their IPs.
We know that on the legal side, when, say for example, just to get to their question, if it does fail and there is copyright infringement, I know the legal system's getting better. How would you describe it? I mean,
it's getting better, and I have reported a couple of cases that really the Canadian companies and foreign companies were quite pleased with the outcome of the negotiation or even court decision. So that we're getting there. It's progressing. Mm-hmm. But again, back to my point. This is, and that's why I raised this issue in my presentation. It's an important issue, and let's make sure that you take maybe a little bit more protection than less in China.
I think that's fair enough.
But fair enough. People think sometimes that I can't bring my equipment there. It's going to be copied. But equipment, they are everywhere on the market, and you participate to trade shows, and and people can buy your equipment and
reverse engineering
the equipment. So you don't have to manufacture in China to get copied. You have to be careful, but that's is certainly an issue that is manageable.
Okay, thank you, Jacques. So we're going to go to another one, and this is going to be all for all three of you, so maybe a couple minutes per answer here, is that we have a manufacturer of roofing products, and we export mainly shingles to about 80 different countries, and entered into the Indian market 2 years ago. We'd like to know with our projections on residence building market for the next 2 years. So we'll start with you, Vijay, but also get the take on your respective markets as well. So roofing shingles.
So India is a very diverse market, okay? So North India is very different than South India or West India. And the kinds of houses would differ depending upon where you are in India. And majority of India, you would not have houses where shingles are being used. Okay, so that's not the market. It boils down to a very, very small area north of India where that product can be utilized. The market is there, but I would caution that you're talking about less than probably 2 to 3% of the overall India as the market where these products can be used. Okay. Second, most of these houses in India do not use any foreign products or technology. So the best way would be to go and try to tie up with a local manufacturer of shingles and see whether there is an opportunity to tie up and penetrate that market.
Okay. We know your market is booming in terms of housing. How, is the story different there?
But I will be humble, Phil, on this, and all my comments will only be anecdotal in the sense that you can see what's being built and what's around, and I love the Canadian way of building houses and the shingles on the roof. But what's the market for China for this? I've seen, of course, some of the usual shingles that we see in Canada, but I would certainly refer to DFATE, our colleagues from External Affairs, where you can get that type of information on the market. They have excellent resources that can maybe dig on a little bit deeper in this niche sector and come back with maybe a better appreciation of the real market in China for shingles.
Fair enough. Rob, how about in your markets?
Well, I would say, without knowing the details of the company that's asked the question, there's two aspects to the housing industry in Southeast Asia: the higher end and the lower end. And you take the Philippines, for example. There's efforts, obviously, on the part of the government to mobilize low-cost housing. And many Canadian companies have pursued these opportunities in the Philippines. It's difficult, of course, because how do you export from Canada for low-cost housing? But there's significant investment in that. And then on the higher end, as the middle class grows, again in a market like the Philippines, there are property developers that are using high-class, world-quality finishes on residential property. And there's an opportunity for that as well. Admittedly, it's tropical climates, so the product has to fit for that. and also it's a long way from Canada. But heavy investment, 550 million people in Southeast Asia, and so there's a lot of opportunity depending on the type of product that they provide.
Would it be fair to summarize then, gentlemen, maybe if you're in the shingling business, the roofing business, maybe a JV is the better way to look at it, to get access to those, yeah? Would be a fair assessment. Okay. We'll move to our next one. Rob, I'm going to put you on the spot a little bit.
Oh.
Presently, you are not giving any cover on Thailand. When do you think that this will be reintroduced?
Interesting question. Obviously, for people listening in terms of Thailand, what has happened is primarily related to the flooding in the fall of last year, that and the impact upon the supply chain and manufacturing operations. So we did look carefully at what was going on in Thailand, and it was great concern, of course, on the part of suppliers and manufacturers, particularly in the area north of Bangkok. And we've reviewed the situation a couple of times in the last, obviously, in the last few weeks and since Christmas. And we will be reviewing it again in terms of opening up to provide cover. I've been to Thailand a number of times in the past few months. And even in mid-January, there were still sandbags at various places in downtown Bangkok, although the water had receded. So the impact upon the global economy and the Thai economy was quite severe. We're looking to obviously open up as soon as we can, and I think that won't be long, but we're going to review it shortly.
So we're running at about 10 minutes away now. We've still got a number of questions going on here, so we'll try to get through all of these. Let's see here. This is Indonesia, Rob, so another question for you. Could you please provide some insight into the polymer plastics processing industry in Indonesia? In particular, what is the position in regards to plastic components and consumer durables?
Okay, good question.
Very specific.
Let me see if I get this correct, because I have done some reading on the plastics industry in Indonesia.
Okay.
And one of the aspects that's changing in Asia is the trade agreements within Asia, where China and Southeast Asia have recently lowered barriers on trade of things like plastic products. So what Indonesia has been seeing is that Indonesia produces the polymers, or the basic plastic materials, because they have gas and they're able to process that. But the companies in Indonesia that are actually producing plastic products and let's say the downstream side of the business are facing competition from China, because there's excess capacity in China in some of these producers. And so it's a mixed story in terms of Indonesia versus the rest of Asia, and Indonesia is trying to correct that. The other thing I'll just mention with Indonesia in terms of the domestic market is quite large, but as I mentioned earlier, the infrastructure to get product to port is still lacking in Indonesia, so be careful on what the opportunities are. Okay. I hope that answered the question, but I'm not an expert, but again, happy to look into it in more detail.
Well, that was very specific, so I certainly understand that. I think there's a question that could apply to all three, but I think, Jacques, this might be up your alley here, which is what are the opportunities regarding the aeronautic market? So obviously in China, starting to build the program. More specifically, transparency parts such as windshields and nose panels, how long does it usually take to get into a reliable business relationship? And so assuming supply chain question.
Yeah. Well, first of all, aerospace industry has been identified as a very important sector and a growing sector for China. And our own manufacturer are very optimistic about, of course, the market itself. But one point of the equation that is very important, China is also developing its own aircraft industry and aeronautic industry. And Comac, as an example, is preparing to launch his C919 in a 3 or 4 years horizon. So probably a good time to think about entering the market. Bombardier is already there, also with manufacturing agreement with AVIC, another very important Chinese manufacturer in the aerospace. So I would say it's a very good timing to think about entering China in this space.
Yeah. Great. Thanks, Jacques. Another question, General. This is an interesting one. Does China and India specifically, are there resources available in Canada to help understand the documentation required to export food products into China and India, specifically maple products? Now, there's a Canadian question if I've ever heard one.
Yeah.
So where does someone go to start that process specifically to learn about what the requirements are? We'll start with you, Vijay.
So food industry, the requirements to import anything into food industry is much higher than the other industry in terms of paperwork, and some of the regulations around that, and India is no exception to that rule. The best resource that I have found on that aspect is DFATE. For those who are not aware, EDC is co-located with DFATE around the world, including in India. We are located within the consulate and high commission in Delhi and Mumbai. And we sit alongside our DFATE colleagues. These are the trade commissioners. For instance, there are about 60 trade commissioners in India, and they are divided by sectors. They have a lot of expertise. They are a brilliant resource to tap into what are the regulations, what kind of documentation is required, can you get into that market. From our experience, we have seen Canadian exporters in the food industry exporting to India. It's not really that difficult. I would say it's not more difficult than in other countries, but you just want to make sure that you know what are the rules and regulations and who are the players you are doing business with. But I would certainly recommend Department of Foreign Affairs and International Trade, and we'll be happy to send the particular reference and a website and any particular documents to this particular exporter.
The Trade Commissioner Service. Same for you, Jacques?
I would echo this certainly, because I certainly witnessed the good work of these guys because he's sitting just next to my own office in Shanghai, Henry, and this is a sector of importance for China. And I think we don't see enough of Canadian products, and the demand is there. A lot of Australian product, New Zealand, European product on the shelves, and Chinese are looking for good quality products, and it's not there.
Safe.
I don't know why exactly, but certainly I would welcome more people looking at China. The market is certainly there.
You touched on it, rather, the safety aspect as well for food products is quite important in the market as well. Robin, another question for you. We are in the security market and have been selling to Malaysian Maritime Enforcement Agency for more than 4 years. Our business activities have been slowing down for the last 6 months, mainly due to political uncertainties, the Arab Spring effect, elections. Could you comment on the political aspect of doing business in Southeast Asia right now, as it stands?
The political aspect of doing business in Southeast Asia.
Political risk, should we
say?
Yeah.
Yeah. It's well, again, I could use up all the remaining time talking about the various markets, but the company mentioned that they're doing business in Malaysia, and certainly the Malaysia market is one of the more stable markets politically in the region. And in fact, when you look across the region, there's been a number of articles talking about the kind of silent Arab Spring developments in the region, where in Malaysia, for instance, the government has started to unwind some of the restrictions on freedom of speech and on the economy in the last few months. Indonesia's moved to a democracy that's well established. And each of the markets is developing in its own way to make it easier for Canadian companies to do business in the type of sector that this company's in. And the only other thing I'll mention is that I think security equipment, and I think it's the same in India, that's a sector where there's a lot of opportunity because there's investment into public safety, into basically making sure that the security forces, as well as municipalities and cities, are safe. And so any Canadian capabilities in that sector, I think, have a great opportunity in Asia.
Okay, thanks, Rob. Also true for you, Vijay, as you mentioned, in India as well?
It's pretty much the same for India as well as to what goes there.
Okay. A couple more minutes. Let's see if we can squeeze a few more questions in here. Jacques, this is for you. When a Canadian company wants to take advantage of setting up business in China, is it more cost and time efficient to either set up a wholly owned subsidiary or a joint venture with an existing Chinese firm when possible?
Yeah. Yeah, well, thank you for this question. This is an excellent one. And the trend is really for wholly owned foreign enterprise. So UFI 100% owned by, whatever, directly by the Canadian parent or through a holding in Hong Kong or other places. But and I think it represents, from my discussion, certainly 80% of all investments in China now are more done through OFIs than joint ventures. Of course, some industries are restricted, and you cannot enter the industry without joint venture with the Chinese partner, and that's fair enough also. And of course, depending on your business plan, you may want to consider a joint venture because it adds, of course, a lot of value to the operation and may simplify a lot of things. But certainly the trend, depending of your sector and your business plan. But a WOFI is certainly a very interesting way to invest in China.
Yeah, so the big push is definitely going that way.
Yeah.
Then, yeah. Okay. This is an interesting one. India and China. I think Jacques might actually. Well, we'll get both of you in on this. We are exporter of fresh produce from Canada and the U.S. looking to grow our exports in India and China. How high is the risk of sanitary restrictions and customs procedures in India and China? I think we touched on that, so I think we're okay. But the last part of this is interesting. Can EDC help in the case of exporting fresh produce? Not a problem. I think we can get to that. However, if there is any problem with customs clearance, the perishable cargo tends to go bad, and we will have quality claims from receivers. Can we protect against customs clearance acceptance risk with EDC's insurance products? Anyone?
Well, that's a tough one. I would say contractually, we have to look at the contract, but and are we talking about the political risk here, or it's more a regulation that you're missing some points, or your labeling is not right, or I don't know exactly, but you have to be careful that it's not really related to your own process that you have to deliver this document or at this person or whatever. So or is it more political in certain decision by maybe a political but normally that should go fluidly, and if there is a problem, that's normally more an administrative problem that is not covered under a credit insurance policy. So
it's something that's come up on occasion in some of the markets in Asia that I'm familiar with, that Vietnam, for instance, more with, let's say, pork products or meat products, where the price has spiked all of a sudden, and there's been a sudden change, and then the importer doesn't want to accept the goods because of either the price has dropped, I suppose, in terms of the contractual arrangement. And those are areas where, from EDC's perspective, we like to understand the business, the risks, and talk to the exporter about what we can do to support that kind of thing. But sometimes you're caught in a bind with things that are out of your control, as Jacques mentioned, and that may be political even beyond just the regulatory environment of accepting a good.
In Indian markets, certainly, even if there is no political problem, there could be delays, whether it's custom delays or whether getting the product to the end customer, because there are bottlenecks. It's bound to happen. All we would suggest is, and from insurance point of view, can EDC make you whole if that happens? Again, my colleagues have already answered that question. The best thing, the best solution would be to make sure that you are looking at refrigerated storage, whether at custom facilities or to your customer.
Right.
Well, fair enough. Thank you very much, gentlemen. And as our time is now drawing to a close, I can see we're going to conclude our Q&A session. But a sincere thanks to our audience today for a lively session, and of course to our experts, Jacques, Vijay, and Rob. Gentlemen, it was very informative for me. I really enjoyed it. I hope our audience did as well, and I have every faith that they did. For our audience, however, before we sign off, I'd like to remind you that the archive of this webinar will be available to you shortly. So what we'll do is we'll send you an email in which you'll receive the necessary links to access the archive. And of course, please feel free to contact us at any time by email at marketing@edc.ca. I hope that's under our screen right now. Again, it's marketing@edc.ca. If you have additional questions, or if we were unable to get to your questions today, I know there's a few that unfortunately weren't able to get to. And if you are so inclined as the audience, we would greatly appreciate your feedback on this event, and we invite you to add your comments to the post-event survey. And that'll be included in the follow-up email that I just mentioned. And we use your comments and your suggestions to help us improve future webinars towards your interests and your needs. And again, I believe the gentleman were quite sincere. If you have further questions, please contact us. So on behalf of Jacques, Vijay, and Rob, and all of us here at EDC, thank you for participating in today's Frontline on the Asian Market webinar. Have a great day.